everyone, and welcome to this exclusive interview from The Papers. My name is Wana Ifrim. I'm lead editor at The Papers. And today I'm joined by Reuben Piryatinsky, CEO of Altitude Consulting. At The Papers, we spotlight the big ideas, key developments, innovations, and technologies shaping the future of payments and fintech. From cutting-edge research to emerging trends and shifting regulations, we aim to give our readers meaningful insights into what's happening across the industry. In today's video interview, Reuben will share key details and expertise on the progress of open banking in North America, the technical and regulatory challenges banks face, the impact of the personal financial data rights rule, and why financial institutions must prioritize to lead in the evolving data-driven landscape. Reuben, thank you for taking the time to join us and share your insights. How are you today?
Thank you, Anna. Really good. How are you?
Very good, thank you. Well, Reuben,
Fantastic.
why don't you tell us a bit about your professional background and maybe introduce Altitude Consultants to our readers?
Yeah, absolutely. I'm in the financial industry for over 20 years now, and I've worked with some very large financial institutions such as Morgan Stanley, Bloomberg, as well as regional banks and fintechs. And I've launched a couple of fintechs as well along the way. So, in my experience and throughout my career so far, I've seen firsthand the challenges of financial institutions and fintechs that they face in working together and in the secure exchange of financial data. And I actually experienced this firsthand when I was running a fintech in 2017. We were connecting to clients, helping clients connect their accounts to us, and we're using an aggregator. And we were experiencing all of the common problems with aggregation, with flaky connections, accounts getting locked, cards getting canceled, and so on. So I knew there had to be a better way. And a few years later, I started the company that I wanted to start to solve these problems. I started Altitude in 2020. And we're the first open banking consultancy in North America. We're helping financial institutions create connected and intelligent banking experiences.
All right, thank you so much. And yeah, what has been North America's journey and progress toward open banking so far?
In North America, we've been actually on this journey for officially for the past 10 years or so in terms of API-based data sharing. But even before that, North American fintechs have been using this process called screen scraping for getting financial data from financial institutions. So that started about 25 years ago in the early 2000s. Uh, then in 2016, there was an introduction of, or the beginning of an API standard for sharing financial data, which turned into FDX, the Financial Data Exchange, in 2018. Basically, FDX is the consortium for that's responsible for creating an open banking standard. It's a group of financial institutions as well as fintechs and other market participants that got together to create that. And FDX has really grown a lot since its introduction. Now we're at over 114 million connected consumer accounts through the FDX standard, which is really remarkable. So and now all that was market led. The industry got together to solve the problem of data sharing. However, the regulators started noticing that this was happening, and in 2020, the CFPB, the Consumer Financial Protection Bureau, has announced that they're intending to create a regulation, which was finally formalized as Section 1033 of the Dodd-Frank Act. And that was finalized in 2024, so about a year ago. Uh, There are a couple of challenges right now with regards to 1033, which we'll get to a bit later. But that's been the journey in at least in the U.S. so far. Now, Canada has followed a similar market-led journey throughout this time, with aggregation starting and then eventually FTX. There is regulation in progress with some bumps along the road. In 2019, there was a research report that was published by the Department of Finance called A Review into the Merit of Open Banking, which explored the benefits and the possibility of implementing open banking in Canada. And in 2022, the Department of Finance of Canada appointed an open banking lead, Abraham Tachtian, to lead the creation of an open banking regulation and framework, actually, for Canada. So uh, since then, since then, we've also seen another agency that's was appointed as the agency that's going to drive open banking in Canada going forward, the FCAC, or the Financial Consumer Agency of Canada. And we don't have a framework yet, government-wise, Canada-wise, but there's an intention to create a framework and to create a specific timeline for a framework.
Mm-hmm. And you have a lot of conversation with financial institutions, of course, and based on those conversations, what do you see as the biggest challenges and hurdles banks have when adopting open banking APIs and data sharing?
Yeah. The first one is that uh, in order to create APIs for data sharing, well, you have to have access to your internal data and have an easy and performant access to that data. So a lot of data right now at financial institutions resides in legacy systems such as mainframes that were never built for modern APIs and for externally facing APIs. So what that means is that a lot of financial institutions are struggling with getting the data from all these different sources and putting it into one consistent interface. And they're building middleware layers to facilitate this access. Uh, it's also really important because with the volume of requests that banks get through externally facing APIs, you need to have an architecture that is able to handle that volume and is able to handle the security aspects. Now, another challenge is stems from those same types of legacy systems, and that's cloud migration. So a lot of the databases are still in on-prem systems. A lot of them are mainframes. So migrating whenever possible to the cloud is something that a lot of financial institutions are doing right now, or really having the right trade-offs between on-prem and cloud, so for hybrid architecture. The third challenge that I'd like to mention is third-party risk management. So a lot of banks have been building APIs internally that are ready for internal consumption, but I've never actually created APIs that are there for external use. And when there are external companies, external developers requesting access to APIs, it's essential for a bank to vet and confirm that those third parties are trustworthy, that they're actually meeting all of the security requirements, the data handling requirements, various governance requirements. Uh, that's called third-party risk management. Financial institutions have been doing third-party risk management in throughout their procurement departments, but for open banking, it's very different because now first of all, we have a different set of requirements. Second, a lot of these procurement departments have specific processes that were not designed for the volume of third parties that are will start requesting access. And there are thousands of third parties right now that have access through aggregators. They don't have to go through these rigorous TPRM processes. They will have to once connecting to banks.
Thank you so much for sharing. And if you look at the business models in open banking, we know that when we talk about open banking right now, we talk about compliance and only compliance. But
Mm.
in North America, how are banks and fintechs adapting basically their business models to go beyond compliance, for instance, to go towards monetizing data or other things?
Yeah, that's a great point because compliance will only get you so far with open banking. Compliance is essential. However, compliance is usually seen as a cost and not as a cost center and not as a profit center. So we've already seen some banks making really interesting decisions and implementing really interesting business models through with open banking. One that stands out, well, a few of them that stand out. One of them is premium APIs. So, on top of the regular APIs, the standard APIs that need to remain free, there is an option to create premium APIs for additional value add services. Uh, and that's especially applicable to business banking and commercial banking. Citizens Bank really stands out in that they've created a suite of commercial banking APIs that let corporations connect with their ERP systems and have the um, seamless synchronization of data, seamless reconciliation, and many other services. And citizens actually reported that a lot of their commercial clients are now beginning to use those APIs as their primary channel, as opposed to using the online banking for business as the primary channel. So this is already showing a shift from online banking logins into API logins and API usage. Another one is value add services and value and personalization. And we've already seen, so this is something that's already being done in other regions of the world. Other players like Revolut, for example, in the EU, have a really nice way of personalizing the customer experience in their app. In North America, we have Chime, and that really stands out in the US. They provide a personalized user experience. They're a neobank, and they provide a lot of the services that banks have and more. So they have personalized user experience. They have real-time FICO score tracking, credit building tips, and also premium memberships that they offer. In Canada, we have a company called Wealth Simple, which is doing a lot of very interesting things. So Wealth Simple originally started as a wealth management investing company, and they've recently made an announcement where they're moving into banking. So they're now offering banking services, bank accounts, credit cards, and the bank accounts are actually paying very high interest rates. The credit cards have very consumer-friendly features, and they're also providing much higher deposit insurance on their deposits. So these are just some of the companies that really stand out. I believe that these financial institutions are actually going to, they're already quite popular. They're setting the benchmark for what banking should look like. And uh, I believe that they're going to start with more of these kinds of features and more this repeatability. They will start taking some clients from the mega banks as well as other banks that are not keeping up with the pace of change and with these capabilities.
All right, thank you so much for sharing these examples with us. And what do you see? I also have a questions regarding adoption and demand for open banking enabled services in North America. How do you see this?
Yeah, demand is certainly very high in North America. So over 80% of consumers have connected a fintech app to their bank. And this number is even higher among the younger demographics. About 90% have connected fintech app. Overall, as I mentioned, in terms of so some of these connections to through aggregators through are actually done through the old methods of screen scraping. However, API-based adoption is gaining traction, and it's gaining traction really fast. So, as I mentioned, FDX has reported 114 million consumer accounts connected, and that number has grown by over 50% year over year. So we're seeing a very high pace of change and how high pace of adoption in terms of open banking uh, adoption in North America. Whether and we've been so far market driven.
Mhm. And you mentioned earlier Section 1033 of Dodd-Frank.
Yeah.
I think that's also a very important topic for our discussion. How do you see this impacting open banking adoption?
Yes, so 1033 was introduced in or finalized rather in October 2024. It's been long in the making, and it was when it was finalized, it was well anticipated milestone because it signaled the move from a market-driven approach to having a formal regulation in North America. The way that the regulation had it, and still actually for that matter has compliance timelines start in 2026. So that created a big push by a lot of financial institutions to accelerate their open banking efforts. And for those that have not been looking to build open banking APIs or that were trying to decide whether they should do it or not, that was a strong catalyst. Now, having said that, the future of 1033 is currently uncertain because there were a few changes that happened since it was finalized, including litigation that was filed against the CFPB on the same day that 1033 was introduced. There was also a change in administration and a big change and reorganization of the CFPB. And so, as it stands now, there is a motion to vacate Section 1033 that was filed by the CFPB. The decision is with the court now, and the final decision has not been made. There's actually another fintech group that stood up to and stepped up to defend 1033 because of the benefits that it provides to the industry. So there are a lot of moving parts at the moment, and we it's yet to see how that's going to play out. But as it stands right now, 1033 is still a law as it stands today. The deadlines are still in effect, but I do expect that to change.
Okay. We will definitely keep a close
Mhm.
watch on that. And one final question, actually two questions. What is your outlook on the evolution of open banking and market adoption in North America over the next years? And the other question is, what strategic priorities should banks focus on to basically position themselves as leaders in the open banking era?
Uh, yeah, really good questions. I would say that in terms of adoption, I expect the adoption of open banking to grow regardless of whether there's a formal regulation for it or not. It's just the question is going to be the pace of change, but there's certainly very high market demand. So, from the regulatory perspective, there are a few options here or a few paths that I see. One of them is that 1033, and let me speak about the US for a moment. One path is that 1033 would remain, but parts of it could be reopened for reevaluation, and that would create that would create changing timelines, that would create the need to rewrite different portions of the regulation. So we'll see deadlines shifting, and new potentially rules or parts of the rule that will look different in comparison to where they are right now. Now, the other option is that 1033 may be vacated altogether. So in that case, would be back to a fully market-driven model. However, we have seen indication from the CFPB that they would like to rewrite the rules. So if they do, it'll still be a few years until the rule is rewritten and until we have a new rule for open banking. So there are a lot of moving parts, as I mentioned, and what this means to market participants, to financial institutions, is that now open banking, we may be at a place where implementing open banking could be something that's done at their own discretion, meaning that it would be a choice, not an absolute requirement. And what this would mean is that would be back to some of the similar to a few similar challenges that we've seen so far. For example, when open banking is optional, it's discretionary, we see that it competes with the discretionary budget, with discretionary technology spend and other discretionary products. So it's important to build a strong business case for that. However, we've seen the consumers are slowly shifting their accounts to financial institutions that provide better and more personalized products and experiences. Some a recent survey shows that 91% of consumers want to see all their accounts in one place. For example, 72% of consumers will switch financial institutions for better client experience. This was a recent research rather from MX. So I do see banks needing to prioritize open banking in order to remain competitive and in order to offer the best experience for their clients.
Okay, well, all right. Thank you again, Ruben. It's been a pleasure having you with us today.
Thank you. My pleasure.